Bismillahirrahmanirrahim. So, students, today we are doing the May-June 21 past papers for O levels. Topic budgeting, question number 5 of the past papers. N Limited produces and sells one product. Product has unit selling price of 160 and budgeted sales for July and August are as follows. So, budgeted sales for July 198,400 and for August 240,000. Then the selling price. So, selling price per unit in dollars. So 160, 160. If we would divide the sales by the selling price, we would get the number of units sold. So here also, then it goes on to say that cash sales are 20% of total sales and the remaining are credit sales. Then N Limited intends to achieve the following inventory level at the end of each month: July, August. Okay, we will read the requirement, but first read the answer requirement. So state two benefits of preparing a cash budget. So for this, the theory part. Part A, two benefits of preparing a cash budget. The cash budget can let us know if there are any deficits so that we can arrange finance to avoid any shortcomings. Then number two, the cash budget can let us know if we have cash surpluses, cash surplus, so that we can find investment opportunities to invest the surplus cash to earn more income. So this was the answer for 2 marks. Then going on to our requirement number 2. Prepare a production budget in units. So for production budget, okay, so production budget for the month of July and August. So for production budget, we need the opening inventory, then we need the closing inventory, production, and we need the sales. So for inventory, the data N Limited had 240 units in inventory on 30th June. So opening inventory for July would be 240 units. And for August, the closing inventory. So the closing inventory for, let's read it above. 20% this, this, and this, and this. So we can see the point number 2. that we have the number of units that N Limited intends to achieve the following inventory level at the end of each month. So for July, the closing inventory is 300, and for August, the closing inventory is 240. Sorry, 200. The sales we have calculated here and here, and the opening inventory would be the closing inventory for July. So to get the production, how many units to produce? So opening inventory should be in negative. Why? If we go on to see the production budget for February March 21 question, see, these are the units produced and these are the units remaining. So this is the production, and these are already part of this. So we always less the opening inventory because it is coming from prior month. And then the sales that these opening inventory, this closing inventory are part of the sales. So this is left and this is the net left. So the production is 1300 and 1400 units. So this is our answer for part B, production, budgeted production in units. Then moving on to prepare a cash budget for each of the month for 11 marks. So cash budget. So July and August. So for cash budgets, we need the receipts and we need the payments. So for receipts, we have cash sales. If we look that cash sales are 20% of total sales in all months. So cash sales means current month sales. So sales are this much and 20%. So 3960 and 20% of August. So these are our cash sales. Then sales of previous month. The remainder are credit sales receivable in the following month. The actual sales for June were 214,000. So sales of previous month. So previous month's June sales were 214,000 and remainder, so 80%. So we get our sales of previous month as 171, 200. And if we go on to see for July, then 158, 720. So together 206720, 210880. So these are the receipts. Then moving on to payments. So raw materials are purchased in the month of production. So we would make a working. So each unit requires 5 kilo. So 5 kilo multiplied by $18 per kilo, $18 per kilo into number of units. So 1300 for July and 1400 for August. So payment to supplier. So and they are getting a discount of 2% cash discount. So into 98%. So for July equals to 5 multiplied by 18 multiply by 1300 multiply by 98%. So 114660. Then 5 multiply by 18 multiply by 1400 multiply by 98%. So 123,480. And we are make a short working here for your understanding. Then direct wages are 40 per unit payable in the month in which they are incurred. So direct wages. So direct wages are 40 per unit. So into 1300 and 40 into 1400. So 40 into 1300 and 40 into 1400. Just to inline our working. So direct wages. Then in any month where sales exceed 200,000, workers are paid a total bonus of 10% on the excess. The bonus is paid 1 month after the relevant sale. So we have the sales for June, 214,000. So bonus. So see, 214,000 minus 200,000 multiplied by 10%. So equals to 214 minus 200,000 multiplied by 10%. So bonus. Then if we see for July, see the July sales are 119 and for August. So for August, it would be paid in September. So here, no bonus. Then fixed overheads. So for fixed overheads, for June was 60,000. It is expected to increase by 5% from July. So for fixed overheads, I will make a separate working. Fixed overheads. So June, July, and August. So fixed overhead in June, 60,000, expected to increase by 5%. Then this is expected to increase by 5%. Okay. So then it says that of these 60% overhead are paid in the month it is incurred. So in the same month, 60%. So this into 60%, 60%, 60%, and 40% in the remainder month. So 60,000 into 40% and 63,000 into 40%. So our fixed overheads are fixed overhead current month and remainder month. So for remainder month, 24,000 and for current month, 37,800. For remainder month, 25,200 and then for current, 39,690. So this is our fixed overhead. We will make a box over here. Okay, so I am just showing this box, but you don't have to make this in the paper. Then machine at a cost is purchased. So machine. So in August, 40,000. So we have got all our figures and we can calculate the total payments. So total receipts and total payments. So equals to sum and equals to sum. So 229,860 and 284,370. So the net amount. So net payment or net receipt. Net receipt slash net surplus slash deficit in bracket. So 210 is a receipt and this. So deficit, and here also a deficit. So moving on to the opening balance. So opening cash balance at 1st July is 8600. So 8600 cash balance. So this plus this 61620 is the closing balance. And the closing balance would be the opening balance for August. So if we would sum it, then 16030. So this was the answer for your cash budget. Okay, so here in this question, your figure, this figure won't match the examiner figure. Then moving on to part D. N-Limited wishes to improve the cash position at the end of August and wants to have a minimum ending balance of 24,500. To achieve this, one of the director proposes that a cash discount of 4% to be offered to some of the credit customers in August so that they will make an early payment in August. Calculate the minimum amount of credit sales to be offered, the cash discount in order to achieve an ending bank balance, and explain two other methods to improve the cash position at the end of August. So we will cover this in our part 2 of the video. Thank you for watching. To be continued in part 2.